Now I would like to proceed to the session, so I may invite our valuable guests. Thank you. Distinguished guests, ladies and gentlemen, before starting the session, I would like to introduce my guests. I will start with Mr. Oscar Arce from the Central Bank of Spain. He is the Director General of Economics, Statistics and Research Department. And I would like to introduce Mr. Thierry Borel. He is representing today the Central Bank of France. Currently, he is serving as the Finance Counselor and Deputy Head of the Economics Section of the French Embassy. I will be giving the floor to our esteemed speakers to share their experiences and visions on the topic. We are very sorry.
Mistake with the presentation. It's not this one. It was another one in the same. Yeah, it's not this one. Sorry.
Başka bir presentation diyor ama. All right, sure. So yeah, we'll deal with this issue. Okay. Yes. So. And we'll have a Q&A session as well, just before the closing session. So first I would like to introduce Mr. Arce and then Mr. Borel, and I will direct some questions to Mr. Borel, and then Mr. Arce will have a presentation, and he will also be directed to questions, and then the Q&A session will start. So Mr. Arce, he is, as I said, the Director General for Economy, Statistics and Research. He's a member of the Executive Commission of Banco de España and alternate to the Governor on the Governing Council of the European Central Bank. He is also a member of the Economic and Financial Committee of the European Union and of the Monetary Policy Committee of the European System of Central Banks. Since 2019, he has been a member of the board of the International Center for Monetary and Banking Studies. He also served as Associate Director General of Economics and Research, Director of Monetary and Financial Studies, and as Head of the Division of Macroeconomic Analysis and Forecasting at Banco de España. Before, he was the Director of the Research and Statistics Department at the Spanish Securities Market Commission, Deputy Director General at the Economic Bureau of the Spanish Prime Minister, and prior to that, he worked as a Senior Economist at Banco de España. He was involved in the work of several international bodies with responsibilities on the fields of capital markets and systemic risk, including the European Securities and Markets Authority, the European Systemic Risk Board, and the International Organization of Securities Commission. Mr. Arce holds a PhD in economics from the London School of Economics and Political Science and an MS in Science in Economics from the University College London, and has written extensively on macroeconomic, monetary, and financial issues, including some articles published in top economic journals.
Thank you.
And our second speaker is Mr. Thierry Borel. He graduated from Sciences Po Paris and earned a master's degree in business administration at the University of Chicago Booth School of Business. Mr. Borel has been working for Banque de France for more than 20 years, occupying several positions within the Bank Supervision Department, the International Relations Department, and the Financial Market Department. He has also been holding several positions abroad as technical advisor in Tunisia and financial counselor and deputy head of the economic section of the French embassy in Abu Dhabi, Beirut, and Ankara. His fields of expertise include bank supervision, interest rate markets, and monetary policy implementation. So after introducing my distinguished guests, I would like to direct my first question to Mr. Borrell so that he would share his comments with us. Sir, thanks to the global financial reform efforts led by the G20, most of the fault lines to the global financial crisis have been fixed, actually. At the current juncture, how do you evaluate the resilience of the global financial system and the outlook of global financial landscape?
Thank you very much for giving me the opportunity to express myself on these very interesting topics. And thank you very much for the speech you delivered through Mr. Chetinkaya. I think it touched upon all the major topics relating to financial stability issues, financial stability challenges, what are the ways forward, what are the main driving or key drivers of this industry, and what are the next challenges that we have to cope with. Turning to the financial stability and the outlook, I would say, of the financial landscape. As you know, the global financial crisis of 2008 was a major shift. I mean, there have been some banking issues, some banking crises in the past, but not of that magnitude, I would say, since the Great Depression. And the issues which were raised by the collapse of Lehman Brothers, of Bernstein to some extent, have raised some additional questions, and the G20 has mandated the Financial Stability Board to try to perform some analysis and to try to find some ways to cope with the causes of this very big financial crisis. And I think that there were four main areas in which works have been carried out. Two of them have made some good progresses, I would say, and two of them are still a bit lagging. The two areas where the most of the progresses have been made are derivative markets. So there have been some regulations to try to share data, to make some reportings, also to direct all the standardized products through a clearing house and try to perform the transaction through electronic platforms. And all these new regulation, all these requirements, there were also some requirements regarding capital and margin in terms of finance. All these steps have been quite well being implemented throughout the world, and huge progress have been made in terms of transparency, in terms of simplicity, in terms of clarification of all the roles of the different players. So in this respect, regarding the derivative markets issues, a lot of progress have been made. Of course, there are still some margin for improvement, but things have been in the right direction and quite far in the right direction. The second main area where a lot of progress have been made is the bank soundness, the bank robustness. A lot of efforts here also were made to make some more risk-based capital adequacy ratio. There are lots of ratios have been established, such as the risk-based capital adequacy ratio, liquidity coverage ratio. Most of the big banks, also for the systematic big institutions, there were some capital buffers which were required and which were implemented. These measures are quite well also been implemented all of the major countries and in quite extensive way, I would say. So in these two main areas, a lot of good work have been made. Of course, there's still some works and still some implementation to be made. That's normal because the industry is moving and we have to cope with a moving and changing environment. But I would say that in these two topics, there are lots of things have been made, and lots of the causes which have triggered the crisis are now more or less, let's say more than less, been tackled. There are two other areas in which progress and works have been carried out, but in which a lot need to be done more, and countries and supervisors and standard setting bodies must be committed to try to make these requirements implemented in the countries. And these two areas are first the resolution, trying to ending with, as you rightly said during your speech, trying to ending with the too big to fail issue, and too big to fail thinking that those institutions couldn't fail, but in fact they fail, and Lehman Brothers taught us that this kind of institution could fail. And so there has been some resolution plan which have been implemented in most of the countries. Things are quite for big banks in a home perspective, I would say, the resolution schemes have been quite well implemented. There are still some improvements regarding other actors such as insurance companies or CCP actors, for which these resolution schemes are still not quite there. So there's still some margin for improvement. And the last, but I think my colleague will talk extensively on this, is the non-bank financial intermediation, for which the Financial Stability Board have carried a lot of work regarding trying to know what are the trends, what are the risks, what are the actors. But we are still, I would say, at the beginning of trying to cope with all the as you said, with all the trends, the key drivers which are reshaping and completely changing the financial environment and the financial business, I would say, at large. So this is I would say the main, the broad picture, I would say. A lot of things have been done. Financial institution and financial framework, financial environment is more robust than 10 years ago. Financial institutions are more robust, more liquid. But there are still some areas in which there are some weaknesses and which require some additional work and some additional measures. And also, these measures should be implemented in an even manner across all the countries, so as to avoid a breach in the level playing field of the countries, and try and providing these countries with opportunities to, just to play with the standards, not to try to apply them so that their industry could perform better. So there should be some kind of commitment all across the border, all across the country, to implement all these measures at the same time with the same the same commitment, I would say, from all of these countries. So that's, I would say, I would say that, broadly speaking, things have been better over the last decade.
So thank you. I mean, so a lot of issues are dealt with, and so we have solved a lot of problems, but probably news are emerging. So actually, you can also maybe briefly comment on how do you see, like, how do you compare the old risks versus the new and emerging risks nowadays?
Okay, so this is a bit of a question of black and white, but you know that in the real life, nothing is really black and nothing is really white, so it's more like a gray thing. What you call the old risks and new risks are two faces of the same evolution, I would say. The financial industry is evolving. It is driven by different kind of trends, industrial, macro environmental, I would say, and there are also some industrial drivers which are at stake and which are reshaping the whole financial industry. If I want to stay with your classification of old and new risks, I would say that regarding the old or traditional risks, which are stemming from the intrinsic nature, I would say, of the business model of banks, I would say that there are 3 or 4 main drivers, I would say, or main old risks that are still there, because it's not because it's old, it's in the past. I mean, they are still there. This is traditional risk. I would say that the macroeconomic environment is still posing some problems regarding the NPL loans. So this will still be there. I would say that on a macroeconomic perspective, the low interest rate environment that we have known for now almost a decade is also causing some risks in terms of profitability, in terms of ability for the banks to raise their capital buffers to withstand some future crises. So this is one of the old risks, but which is still very current, I would say. Also, the regulatory reforms that have been implemented during this last decade has also some creative effects, I would say. So, for instance, when I was talking about the derivative markets, the CCP have been given a more prominent role, but this prominent role is entailing some additional systemic risks at the level of the CCPs, which is not tackled at the moment, or not rightly tackled at the moment. So all these traditional risks are still there, but as you rightly said in your presentation in the speech, there are also some very new risks. I mean, which are stemming from, I think, broadly speaking, three factors. The first is, as you said, the digitalization of the industry, the financial industry. As you said, it brings some very new standards, and it will foster the inclusion. It will have some cost-effective effects on access to the financial capital, which is very good. But at the same time, there are some issues which are not really tackled at the moment because they are very new. All this digitalization process with the fintechs, with artificial intelligence process, with the new algorithm, they are bringing some new risks or some new areas of interest from which the supervisors and the central bank shouldn't be kept apart from. Namely, I would say cyber criminality aspects. The fact that data protection should be something at the center of the force of the supervisors and central banks. There are also some aspects dealing with competition and fair action towards the traditional actors, because the basic principle is that for the same kind of activity, the same rules or the same regulation should apply. But as you said, with these new entities, enforcement or implementation of these rules is probably more difficult because they are not belonging to the banking industry. They are not under the supervision of banking supervisions. So this creates some kind of problems. And the last thing regarding the digitalization is the taxation, I would say, of these companies, which also can create some distortion in the market compared with traditional actors and these newcomers, just like the current state of plays has shown us regarding Airbnb for the hotel business or Uber for the taxi business. So these aspects should be really tackled, and they are not yet really. I mean, central banks have taken some steps and have created some task force, but we are not really still there. We have to understand what are the drivers, what should be the state of play between those actors. So there are a lot of questions. The second main new risk, I would say, stems from the stable, or let's say stable currencies such as the Bitcoin or the initiative launched by Facebook with the Libra. These new currencies can provide some very good outcomes for population which have not access to payments or to a banking system or to banking services. But at the same time, we have to ask ourselves on what would be based the valuation of these currencies. Who will supervise or oversee these institutions? There are also some potential risks regarding data protection. You know that Facebook it's before or an advertising agencies which is using personal data to gear you towards some specific advertisements. So we can have some fear regarding the use these institutions can, because they are private institutions, can use for other things than financial transaction. And we also have to answer the question, what is the ambition of these cryptocurrencies or stable currencies? I mean, if the valuation, I mean, if the currency and the value of the currency has been devoted to central bank, it's not for bad reasons, because the public at large should have credibility in this currency. We don't know what will be the business model of these private cryptocurrencies, and we don't know if the public at large will have confidence in using them. So this raises a lot of questions again, and task force have been already set up, but we are just at the beginning of the process of understanding what are the major critical aspects, I would say, of these different new technologies, and how to tackle them and try to avoid having some systematic risk on a global scale, I would say. And the third new risk, I would say, is, and you have touched it upon during your speech, is the green financing. There's an increasing concern among supervisors and central bankers regarding the risks entitled by the green financing topics and the climate change and the energy transition topics. And there are two folds. First, these new challenges, the climate change, the energy transition issues are entailing some risks for the financial system that we are not really comfortable with. We don't know exactly what are the financial costs associated with these risks. So there must be some studies, there must be some work to be carried on trying to assess on a global scale what could be the financial implication, what could be the financial cost of these new green risks. That's one point. And the second point is financing also these new challenges. And it has been established that for the next decade, just in the European countries, we will need something like more than 150 billion euros a year for 10 years to reach the goal which were set by the EU regarding climate change and energy transition. So there is a real challenge to find new resources and to gear these new resources towards these new challenges.
Thank you very much for your comprehensive answer. So now the floor is yours, sir, for your presentation. Yes, please.
So, thank you very much for your kind invitation to take part in this wonderful meeting. In particular, I would like to thank the Central Bank of the Republic of Turkey for the very generous invitation. It's a pleasure to reflect on these very interesting issues with all of you. In this brief presentation, I will deal with a number of issues that Dr. Rosell already discussed on, and in particular I will deal with the phenomenon that is quite global of banking disintermediation. And in particular I will bring you some evidence and some experience from the euro area that is suffering this process in a rather intense way. Later on, I will reflect briefly on some of the drivers of the determinants that may be behind this process of bank disintermediation. And finally, I will pose some questions about the whole process that could probably pave the way for further discussion. So this is the evolution. This is a metric of banking disintermediation that has become quite popular. In particular, in this picture, I'm showing the proportion of fixed income securities issued by non-financial corporations as a percentage of their total debt. And one important message here is that in the euro area, which is the first shaded area there, disintermediation, I mean the share of income securities issued by non-financial corporations has increased quite dramatically since 2007. The blue bar is the level of this variable for 2007, and the red one is for 2019. So here you can see quite an important increase in the weight of non-intermediated finance going to non-financial corporations. Still, the level of bank intermediated finance for Europe is quite large. I mean, and it's significantly larger than that in the United States or in the United Kingdom, as you can see there as well. So, in some cases, and I think this has to do with the legacy of the crisis, in some cases, what we have seen is that this process of bank disintermediation has been more intense in those countries that were more severely hit by the banking crisis that took place some 10 years ago. Here is the evidence for my home country, for Spain, where you can see in the left panel is that the evolution of the proportion of debt securities issued by non-financial corporates as a proportion of their total debt, in the case of Spain, has increased quite fast. I mean, this is the red line there. Before the crisis, the total share of debt in the total mix of financing of non-financial corporations was significantly lower in the case of Spain than in the euro area as an average. And what we see now is that the process of bank disintermediation in my country has been so intense, it's been so intense and so rapid that now the level of non-bank financing in the real sector of the economy is even higher than that of the euro area. And actually what we have seen in Spain is that, and this is the main message coming from the right panel, is that over the last few years, and to a large extent as a consequence of the banking crisis, what we have seen is that many firms, for the first time in their life, have started to tap money in the capital markets directly. So in the right panel, the blue bars correspond to the proportion of debt, total debt issued by non-financial corporates that pertain to those firms that go to the market for the first time in their history. So as you can see there, this volume of funds rising by these firms is quite significant and actually is on a positive trend. So many firms for the first time in their lives are now taking advantage of the new opportunities to finance themselves through the market rather than through the banking sector. So what is behind this process of banking disintermediation? I mean, for sure there are many factors taking place at the same time, but I think for the clarity of the exposition, I think it is possible to distinguish between some structural or permanent factors and some others that are more of a temporary nature, though there may be some quite persistent. Among the permanent or structural factors, and it has been mentioned by my two colleagues in the panel, I think it is important to emphasize the role of the new international banking regulation. I mean, over the last decade, and following the global financial crisis, national supervisors and regulators, but also international and multilateral bodies with competencies on this matter, has made a huge effort in strengthening and updating their supervision and regulatory frameworks. As a consequence of this, now our banks are facing more stringent capital requirements, liquidity requirements. They are subject to more intrusive supervision, and so on and so forth. And this was absolutely necessary to tackle some of the issues that were at the very root of the crisis. But at the same time, we must recognize that some of this new, more stringent, more demanding regulation is probably having some impact on the supply of credit. And at the same time, it is precise to recognize that the regulation and the supervision in other parts of the financial sector, away from the remit of the banking sector, has not evolved at the same pace. So this is creating, in a sense, some uneven level for regulation for banks vis-a-vis non-banking intermediaries, and this for sure explains some of this process towards more reliance on non-banking institutions as a way of financing the real economy. In the particular case of Europe, maybe you are familiar with a relatively recent project called Capital Markets Union, through which the European authorities are trying to push forward to promote non-banking sources of financing for the real economy, and in particular for non-financial corporations. My impression is that up to this moment, to date, this project is still at the very incipient steps. So I don't think it is already making a huge difference in terms of how European firms are financing. But in the future, this may also favor some form of disintermediation. And at the same time, the eruption of fintech and big tech and other new non-bank players may also be operating in the direction of promoting some additional disintermediation, with some pros and cons, as was discussed by Dr. Osel in his speech before. And on top of this, I think it is important to recognize that the current environment of very low interest rates is probably also paving the way for more bank disintermediation through several channels. And in particular, some specific pieces of unconventional monetary policies, some specific monetary policies implemented over the last few years by some of the major central banks, especially in advanced economies where the issue of low inflation is more pressing than in other places, for sure are also contributing to this bank disintermediation. Let me devote a little bit of time to reflect and to show you some evidence on the impact that the European Central Bank Corporate Sector Purchase Program, the so-called CSPP, is having in terms of the financing mix of non-financial corporates in my country. This program, the CSPP, is essentially the leg of the quantitative easing program of the ECB, along which the ECB is buying high-quality debt issued by non-financial corporates. Well, let me devote a couple of minutes to show how this program is affecting the way in which corporates in Spain are financing. In the left panel, you see the evolution of the interest rates for several financial assets. The vertical red dotted line corresponds to the date in which this program was introduced by the European Central Bank. And what you see there is that this program had a very important and significant negative effect on the interest rates paid by non-financial corporations, which is the red line there. I mean, the impact of this program on the loans, on the interest rate of the loans borrowed by small firms, which is the blue line, was essentially negligible. The impact on the cost of debt issued by banks was also negligible, but it had a significant, a material impact in terms of reducing the interest rates paid by large corporates. As a consequence of that, I'm looking now at the right panel, large corporations in Spain, and the same is true for the rest of the euro area, started to issue more debt, which is the red line in the right panel. You see that there was a rapid increase in the total volume of bond issuances, and as a result of that, what we saw also was a significant decrease in the demand for loans by these large corporates. So there's this program, the CSPP, really triggered an important bank disintermediation effect in Spain, but believe me, the same sort of evidence has been recorded for the rest of the euro area. So in this sense, this non-conventional monetary policy did give rise to bank disintermediation. Here you see how the total credit that the Spanish banking sector was given to large companies, and following the inception of the CSPP, as you can see there, the volume of loans that the Spanish banks were extending to large corporates suddenly dropped in a rather significant way. Well, this does not mean that all forms, this is an important issue to bear in mind, this does not imply that all forms of banking disintermediation are necessarily negative for the banking sector and for those firms that rely more extensively on the banking sector. Actually, in a research paper that I published with a couple of colleagues from the Bank of Spain, what we find is that the lower demand for bank credit by large borrowers, I mean those who were able to sell their bonds to the European Central Bank, gave rise to an increase in the supply of credit available for smaller firms. I mean, banks face a reduction in the demand for their loans by large corporates that were able to tap money in the capital markets and in some cases to sell their bonds directly to the monetary authority. But at the same time, these banks increased their supply of credit toward small and medium-sized enterprises. Actually, we estimate that for $1 of a fall in the demand for loans by large companies, the banking sector was able to redirect 75 cents to a small corporate. So in this indirect way, the smaller firms benefited significantly from this monetary policy measure. Actually, this was the intended consequence of this measure. Here I'm quoting President Mario Draghi, who essentially argued that this program benefits not only large companies with have direct access to bond market, but also to smaller companies in the sense that this program trigger positive spillover effects to small and medium-sized enterprises. And the channel is the one that I just described. I mean, the fact that large corporations rely more on funding from bond markets leaves more space in the balance sheet of banks to provide loans to SMEs. So an important lesson from this analysis is that not all forms of banking disintermediations are necessarily negative for the natural borrowers of the banking sector. So let me finish with a couple of reflections on this very last idea. I mean, bank disintermediation is desirable on many respects, and Dr. Osel again cited a few reasons or a few aspects on which technological developments and the reliance on non-banking sources of finance may bring some benefits for the society as a whole. This is, I think, out of question. But I think that at the same time, we need to preserve the strength of a well-functioning bank lending channel. And this is especially true in those economies in which small firms, SMEs, small and medium-sized enterprises, play an important role in the real economy. This is the case for sure in the euro area, in which about 60% of total value added is generated by these firms that are also responsible for the generation of as much as 70% of total employment. In a previous conversation with a colleague from the Central Bank of the Republic of Turkey, she told me that these figures are probably higher for the case of Turkey, in the sense that SMEs in this country really play an important role. This picture here essentially tells you that, I mean, according to some recent quantitative analysis, I mean, what really drives the decision of a firm, this is for Spanish firms, but I guess the same is true for everybody else. The most important factor determining the decision of relying on bank credit is the size of the firm. I mean, actually, according to our estimates, almost 80% of the decision on how to finance a firm depends very much precisely on the size of the firm. And we know that the smaller firms, for a variety of well-known reasons, are more dependent and more reliant on bank credit. So we have to ensure that the bank lending channel keeps working in a proper way, in spite of the fact that new technologies and new developments may offer new possibilities for other borrowers as well. In the euro area, I mean, disintermediation is playing a role, as I showed you before, but in my opinion, the top priority should not be just promoting bank disintermediation per se, but rather the priority number one in this field should be increasing financial integration across the area. Here I'm showing several quantitative indicators of the degree of financial integration in the euro area, and the main message coming from this picture is that, as you can see, before the crisis there was some positive, very positive developments in terms of strengthening the level of financial integration in the euro area, but following the crisis and the market fragmentation that the crisis produced, I mean, we went back a couple of decades in terms of financial integration. Afterwards, we have seen some improvements, as you can see in the right part of the panel, in terms of achieving higher levels of financial integration, but still, my feeling, I think this is quite a generalized feeling, is that the level of financial integration within the euro area is clearly insufficient, especially taking into account that we are the second largest monetary area in the world. And let me finish with some questions. As you can see, I have more questions than answers, so I'm sorry for this. But I think that our knowledge on the effects of and the consequences and the causes as well of banking disintermediations is quite limited. In particular, I think that we have to learn more about the stability of non-banking sources of finance over the business cycle. It is true that following a great banking crisis, those borrowers that were more dependent on banks suffered a tightening in their financing conditions, and this is essentially one of the main lessons of the last crisis. But in general, and there is an ample evidence in the literature about this, it is true that following, let's say, a normal recession, typically banks' credit is more stable than other sources of finance, and this is something that in these days we tend to forget. I mean, banks provide, for a number of well-understood reasons, typically provide a very stable source of finance over the business cycle, of course, except in very large banking crises. And this is something that, as I said, sometimes is forgotten these days. Also, these days there is a big discussion, and there are some emerging concerns about the ability or the capacity of non-banks to price the risk in a proper way. You know, you have heard about some emerging concerns about the potential accumulation of unsustainable imbalances in some parts of the non-banking sector, like the leverage loans, the high yield debt in some particular markets, like in the US, and so on and so forth. So risk is not a monopoly or the accumulation of risk is not a monopoly of the banking sector. I mean, these days is probably more pressing in the case of non-bank participants. And also, and this is an important issue for policymakers and for authorities with competencies on regulation. I mean, as I said at the very beginning, we have been working quite hard, at least we tend to think so, in building up a framework for macroprudential analysis and macroprudential policies. But most of this new framework is only applicable to the banking sector, whereas we have no idea on how to deal with systemic risks that are building up outside the banking sector. And this is an issue that deserves much more attention. And finally, I think we have to improve our understanding on how monetary policy is transmitted through the non-banking part of the financial sector. I mean, these are questions that should be answered before we go forward for more bank disintermediation, I think. So that's all on my side. Thank you.
Thank you again for your excellent presentation. Mr. Arce, I also have some questions to you. I mean, first of all, actually, do you expect any changes in policymaking and decision-making practices of central banks? So if there are any, and do you think that the organizational structure of the central banks are enough to capture these challenges and to solve further challenges, I should say?
Well, I think that we have been faced with the responsibility of and the urgency of adapting our institutions, even our mandates to cope with these new realities. I mean, in this sense, I mean, I'm sure that we were fully unprepared before the crisis to deal with some of the issues that we are facing these days in terms of oversight and prevention of systemic risks. But, I mean, important steps have been taken at the national level and at the global level. I mean, let me just refer very briefly to the case of the euro area, which of course is the case more familiar to me. I mean, following the crisis, we set up a project for a banking union, I mean, for a single supervisor that is already operating in the euro area. We have a single mechanism of supervision, which is integrated by the European Central Bank and all the national central banks together, which is working, I would say, in a pretty efficient way. We set up a single system for banking resolution as well, which, I mean, it has a very short experience, but I mean, it's an important pillar for the banking union as well. We have to go further into providing ourselves with a fully founded deposit insurance mechanism. This would be key in order to remove this market fragmentation that we saw during the crisis. And this is an important tool actually in order to make more progress towards getting more financial integration, as I was asking for before. And we have set up as well several bodies and institutions and policy tools to deal with systemic risk as well. I mean, the euro area set up, the European Union actually set up the so-called European Systemic Risk Board, which is again in charge of oversighting the accumulation of risk in the euro area, and it issues warnings and recommendations for the national states. And also within our countries, we have, at the level of each country, we have set up specific macroprudential authorities that are in charge of monitoring and taking policy measures for warding against the accumulation of risk for the whole financial system. I mean, it's a new framework. To a large extent, it remains to be tested in real life episodes. There remain some important areas on which our knowledge and on which our institutional development is clearly insufficient. And this again takes me to the question of the financial sector that is beyond the banking sector. I mean, there our understanding, our information, the availability of data, and the institutional development for monitoring and attacking systemic risk is much more underdeveloped, and this is where perhaps we should put more focus in the coming years.
Yeah. So, and I mean, briefly, do you think that the data monitoring structure, the infrastructure, is it enough to assess the vulnerabilities of the system, or to face new challenges?
Well, For sure, we have now much more information about how the financial system is working now than we had before the crisis. We have more granular data. We are able to exploit this granular data in a more efficient way. But my impression is that there remain some areas in which our knowledge and even our information and data is very limited. Just to put an example, I mean, it seems clear that all these issues about leverage loans and the issuance of high yield debt by some non-financial corporates in some jurisdictions is becoming more and more like an issue of concern. But on the other hand, our information, our basic information about, for instance, the exposure of the banking sector to these non-banking assets and liabilities is very much incomplete. I mean, if you were to ask supervisors in the US or even in Europe about the indirect exposure of their banking systems to this sort of potentially risky assets, I mean, their information would be quite limited. We may have some intuitions, we may have some rough data about this, but our knowledge on the real exposure of the banking sector to these potentially risky assets, at the end of the day, my impression is that it still is quite limited.
Thank you very much. And now I would like to open up the floor for questions directed to our guests, if you wish. Yes, please.
Thanks, Shazad Abadi from London. Thanks for a very interesting talk and really opening up some interesting new areas for discussion. Obviously, being discussed at the government level, etc., with regard to disintermediation and the acquisition of debt by non-banking actors. One of the things I think that was brought up was the idea of how we're going to solve the problem for renewable energy. It was only a small point that was brought up and was not necessarily related to the disintermediation aspect of things. I'd like to hear your thoughts more on the 150 billion, I think it was, a year for the next few years to be able to reach our goals. It's clearly an important point and well worth spending. Otherwise, of course, we've got a lot of other things that we have to answer for. Thank you.
Sorry, I couldn't hear the specific question. What is the specific question, please? Can you?
Yeah, I was asking about one of the statements was that we need to raise about $150 billion a year for the next several decades in order to convert our economy into a renewable one that isn't going to damage the world, as it were. And I wanted to hear your comments about how that's going to be fulfilled, given that we're talking about non-banking actors, and obviously with decreasing prices in the cost of wind farms and solar farms, governments think that they've done their job with regard to incentivizing new build renewable energy. But it's unlikely that solar, which only runs during sunshine, and wind, which only runs when there's wind, will be sufficient to cover our requirements for the base load. And battery technology is potentially a long way off, and potentially we don't even know what the ramifications of installing storage will be. So I'd just like to ask about how you think that particular problem that the world has, and we think it's an immediate problem, one that's affecting us now, will be managed by the sort of financing requirements that you're suggesting might be are becoming evident.
Maybe would you like to take the question, or
I may say something.
Yes.
Well,
Yeah,
I'm
start,
not really a specialist on energy economics. Just let me react by saying that addressing this, the transition towards a more sustainable, environmentally sustainable economy is both an obligation and a big opportunity for, at least for Europe. I mean, it's an obligation because our governments have already agreed upon delivering on some specific goals in terms of reduction of carbon emissions. So this is, for me, is something to take to be taken as given. This is already written in stone, so as to speak. But I think it's a big opportunity for Europe at this particular moment. Why? Well, I mean, I think it is out of question, and President Mario Draghi was very clear about it in the last Governing Council of the ECB. It is clear that we are approaching the natural limits of monetary policy in order to stimulate the economy and to generate sufficient inflation. So we are left with a scenario in which we badly need the contribution of other macro policies. And I think that what is key now is to put in place smart policies that help increase the potential growth of the European economy. And I think that investing in this sort of new technologies and in favoring in an orderly manner this transition towards a more sustainable economy should be, in my opinion, a top priority in terms of the list of potential projects that could be incentivized by the European authorities. I think that the public sector has to take a leading role on this. I don't think that the public sector should be the only actor in this story. I mean, the private sector should play perhaps a central role at some subsequent stages in this process. But for sure, there is a space and there is a big opportunity for European governments to go through a centralized strategy at the European level to address these issues. And I think that in terms of how to finance this, I mean, it is one has to be always very cautious with using public resources. In some countries, the availability of fiscal space has been put into question for good reasons. But I think that given that we are in a situation of historically low interest rates that are expected to prevail for a long period of time, I think it pays off from both a social, environmental, and economic point of view to finance some of these big projects through the issuance of genuine European bonds. That's my view on this issue.
Would you like to add anything, sir?
Sorry. Yeah, I think, as my colleague said, the question is not the how, is not the why nor the when, but it's really the how. And I think that in this respect, the floor is completely open. I mean, we have heard some thoughts regarding green bond issuance, whatever it means. I think nobody really knows. There have been also some more controversial and maybe potentially dangerous or questionable, at least, initiatives or thoughts regarding including, steering monetary policy, taking into account the green emissions or the green projects with assets which will be collateralized or bought by central banks, and which could or the aim of which was to incentivize those issuances. But I think that at the moment these are only thoughts, and I think that when there are so much ideas and which are really flourishing, we have to keep our head cool. I think that we mustn't mix instruments and their goals and their way of financing. I think we have to tackle already a number of stability and monetary policy that are not easy to tackle, and mixing those new issues regarding specifically green financing to those ancient and more traditional issues which the central bank and supervisor have to tackle is something that maybe should be taken with a lot of caution.
Thank you very much. So I think I need to wrap up before the coffee break. So it looks like we have new homework in the future. This session was very productive in terms of giving us some perspectives for the upcoming challenges and how to address them. And I would ask you to join me to thank our distinguished guests. Thank you very much.
Thank you very much. Stay on stage, please. We would like to present you a plaquette. May I invite dear Shazat Abedi?
So we'll get a plaquette.
Please. Evet, please. Please welcome. Please, stay on stage, please. Yes. Yes, plaquette, please. Yes. Evet, konuklarımızla birlikteydik. Teşekkürlerimizi takdim ediyoruz konuklarımıza. Sayın Şezat Abedi plaketlerimizi takdim ediyorlar. All together photograph. Yes. Evet, moderatörümüz Doktor Sayın Özgür Özel'le birlikteydik ve konuklarımız Oscar Arce ve diğer Terry Borrell bizlerle birlikteydi ve kendilerine teşekkür plaketlerimizi takdim ediyor. Danışma Kurulu üyemiz Sayın Şezat Abedi ve Otker. Hep birlikte bir fotoğraf aldıktan sonra bir kahve arasına gideceğiz. Evet, verelim plaketlerini takdim edelim. Evet kıymetli misafirler, bu oturumumuzu da tamamladık. Merkez bankaları ve küresel finansal sistemdeki yapısal değişimlerden bahsetti konuklarımız. İki değerli konuğumuz ve Sayın Özgür Özel'le birlikteydik. Şimdi bir ara vereceğiz ancak bu aranın ardından çok değerli konuklarımız olacak. Ve bu çok değerli konuklarımız da özellikle hep geleceği konuştuk ama geçmişte ne oluyordu? İşte buna da dokunacaklar ve oradan da çok özel hikayeler paylaşacaklar bizlerle diyelim. Ve bunu da haber verdikten sonra thank you very much. Tüm konuklarımıza teşekkür ediyoruz ve hep birlikte bir kahve molasına çıkıyoruz. 10 dakika sonra kahve molasının ardından birlikte olacağız tekrar. Thank you.